Hey traders, this is Munya and welcome back to my channel. So today I'm excited because most of the setups that I sent here are deep in profit. So I'm very happy about that, and we're also having other opportunities to re-enter the market, right? So if you're new to this channel, this is where I post strategies that you can use in trading either synthetic indices or a Forex space. I also post setups every Saturday night or every weekend, depending on when I get the time to. But I always make sure that before the new week starts, I post setups which you can look at, 2 or 3 pairs that I analyze for you and tell you the direction. I also post content that can help you improve your trading in a positive way, right? So if you haven't already, please click the subscribe button and turn on the notification bell so that you're notified each and every time I post a video. Okay? So today I'm bringing to you 5 different ways in which you can tell when to take your profit or when to cut your losses, right? So this is one of the frequently asked question, that when is the right time to close your trades, right? So many people come to me and say, when should I close my trades, right? So one thing you should know about this is no one really knows where the market is going to end up at, right? No one really knows. These are all probabilities and predictions that we do, because no one really knows how the buyers are going to push the market or how the sellers are going to push the market.
Number one rule of Wall Street: nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles.
But you can come up with principles or ways that you can use to increase your chances of winning in the market, right? And those ways can also include knowing when to close your trades, right? It's a very important aspect that you should learn. So here with me I have 5 different ways which can help you know when to close your trades. So number 1, this is from my side, because I'm mostly a price action trader. I draw support and resistance lines almost each and every time before I make a trade, right? So you can close a position when it is approaching the next support or the next resistance level, right? So what do I mean? Let's take a look at this chart. This is GU. So maybe you entered a buy position here when you predicted that it's going to bounce on the support level because it tested the support level before, and maybe you predicted that the next time it reaches here, I'm going to enter a buy, right? So what you simply do is you are waiting for the next resistance level. That's where you're closing your trade, right? So once you had entered the buy here, you are most likely going to close your trade at this level, right? So this is what I mean when I say close a position when it's at support or a resistance level, right? So the same thing happens. Maybe you had drawn this resistance level when you'd seen this, and maybe at this point you entered a sell, right? So this means that once the price reaches this support level, you are looking you are now closing your sell position, because price can either bounce back to this resistance level or you can break the resistance level to leave this as the new resistance and form another support level, right? So that's one way in which you can use to determine when to close your trades, right? So let's move on to the second way, which is candlestick recognition. So let's say you are in a trade, right? And you identify or a new candlestick is formed, and since you know your candlesticks have a story to tell, right? You can either identify a shooting star, which is indicating a reversal in the market, so immediately you know that there's going to be a reversal, so I have to close my trades. Or you can identify the rising and falling three methods, right? Three candlesticks, you know them, right? That indicate a continuation in the market. So here we have the falling three candlesticks that indicate a continuation in the market. So maybe you identify the sell somewhere here, and then you identify these falling candlesticks, which are an indication of a continuation of your trade. Or maybe you enter the buy at this point, and then you start to see these rising three candlesticks, which indicate a continuation in that buy setup that you had. So that's another way. Or maybe you identify a shooting star, right? When you enter the buy, it means the market is going to reverse, right? And so you should exit at that point. Okay, so that's the second way in which you can know when to close your trades. The third way is to use your strategy in reverse. What do I mean by that? This applies to people that trade using indicators, your moving averages, and your MACDs, your CCI, your RSI, right? What I basically mean is, if your strategy is telling you, maybe if a crossover of certain colors is telling you to buy, right? It means the reverse of those crossovers is telling you to sell, right? So if you had entered the buy, it means you are now looking to close. When you start to see conditions for the sell setup being formed. I hope you get what I'm saying, right? So most people use maybe exponential moving average 5 and exponential moving average 15, right? So if they for example, if the EMA 5 crosses to be above the EMA 15, most people consider that as a buy signal, right? So when you see the opposite now happening, whereby the EMA 5 is now crossing over to be below the EMA 15, it means close your position. It's going to be a reversal because you're now seeing a sell signal. Okay, so that's another one. All right, moving on. The fourth way is by using your daily principles. So you identify, there are people that say, I close my trades at the end of the day. Those are the intraday traders, right? So once their trading day ends, they close their positions, whether they are in profit or they are in loss. So that's just a principle that you can use to know when to close your trades. So this is simple and straightforward. You have your starting time to trade, and you have your closing time, and you just close your trades whether you're in profit or in loss, and then wait for a new day to start, right? Also, maybe if you're a swing trader, you say, I don't close my trades until XXX days have been reached, right? Even if you get into profit, huge profits, you don't even close your trades until that time has been satisfied. Okay, So moving on to the last and final way to know when to close your trades, which is your risk reward ratio. So this is the one that I also use hand in hand with way number 1, which is the next support and resistance level. So I use these in conjunction, and they have so far provided me with great results. So what do I mean by risk reward ratio? Risk reward ratio basically means you assign yourself a certain amount that you say I'm willing to lose, and also you assign a certain amount that you say I'm willing to gain on each and every trade that I take, right? So it can be pips, it can be money, it can be points, which you can use to calculate your risk and your reward to form a risk reward ratio. So I normally use the 1:3 risk reward ratio, which basically means I'm risking 1 pip to gain 3 pips, or I'm risking 10 pips to gain 30 pips, or I'm risking $10 to gain $30, right? Or I'm risking $20 to gain $60, right? Something like that. So with TradingView, it's a little bit easy for me to do, because I will simply do this. My entry point maybe is here, and I simply say, my entry point is here, because I made the resistance level that I had already identified, and I'm gonna say if it breaks this resistance level, I'm exiting, and my take profit would be at the next resistance level. So technically you can see that I'm going to enter into a sell trade for GU, and my risk reward ratio is already above 3. As you can see, it's already 4. Okay, suppose I moved way too up. Okay, so my risk reward ratio will always be above 3 each and every time that I take. You can see it's written 3.31 because it's a good entry, but it's always 3 and above, which simply means the moment my candlesticks or my price surpasses this level, I'm going to automatically close, because I'm no longer willing to lose any amount beyond that. And as long as my price is going in my direction, I'll keep holding until I reach this level, because that's where my reward is at. So if you're using TradingView, it's a little bit easy to do, because it will even tell you the exact risk reward ratio and exactly where your stop loss and take profit level should be. Okay, so, and if you're not using TradingView, if you're using MT4, MT5, you have to calculate pips, or you can use your account size to tell you, or you can use a pip calculator, or anything that can tell you the risk reward ratio that you want. This is not the only risk reward ratio which is available or which is good, but this is the one that I prefer. There's so many risk reward ratios. There's 1:2, there's even 2:1, but it is advisable for you to use a risk reward ratio that can produce a break-even point, right? So anything from 1:2 is good, because it is a break-even. It's very rare for you, or it's a very bad habit to trade with a risk reward of 1:1, because it doesn't provide a break-even point. So this is all for today, and see you on the next video. Please click the like button for the YouTube algorithm, so that this video spreads across so many people, and so many people get this trading help. This is GU. I'm looking for a sell, and if by the time you watch this, it's still valid. You can jump in. This is my target point and this is my stop loss. Okay, thank you guys for watching. Until next time.